Welcome back to part 2 of Insurance Essentials for Orthopedic Surgeons, protecting your hands, your income, and your future. And this second part of the episode, we discuss how insurance companies function, guaranteed standard issue plans for residents and fellows, and what orthopedic surgeons specifically should consider based on their earning potential and risks associated with this occupation. Larry, can you tell us a little bit more about the insurance world and how to pick an agent?
In the insurance world, it is a heavily regulated industry, like banking. And a lot of people will say, well, Larry, I really have to shop for insurance. I have to speak to multiple agents. I have to look at multiple companies. The truth of the matter is, if we go under the assumption that all of the agents have access to the same discounts, all of the agents have access to the same policies, and if the policies are structured the same way, the price is going to be identical. And nowhere is this more evident than when you're dealing with resident physicians. And unfortunately, what we find is, as great as the internet can be, both for insurance, financial planning, or medicine, you almost don't know what you don't know. And a lot of times you'll go online, you'll request quotes from, I'll call them internet agents. They'll send you a spreadsheet. It's typically going to have the insurance company logos on there. It's going to have a bunch of columns with minimal information. And at that point, what do? You look at it, and you're probably going to go look for the lowest cost policy and assume, well, hey, if it's the lowest cost, that's got to be the one for me. But when these spreadsheets are created, typically they're not approved by the insurance companies. So it's an agent creating something based on what they believe to be important, which might not be important to you at all. Very often, I find that they're riddled with mistakes. They're missing some really important details that you would want to know as an orthopedic surgeon. It's kind of like the equivalent of not giving your patient informed consent, and you tell them, hey, after you do this procedure, you're going to be running, like a professional athlete. You're going to be jumping high hurdles like there's no tomorrow. But you don't tell them there's a slight chance that we have a complication during surgery. Now, it's probably not going to change what they would do, but I would like to think it would give them a little pause to reflect on, do I want to do this? Does the risk of doing this outweigh the reward of doing this? And that's fine. In the insurance world, one of the biggest mistakes that I see is in the residency and fellow world, and it's typically going to be with foreign nationals or visa holders. So let's just say, I'm from another country. I've got my sponsorship. I'm doing my training. And God forbid, I become disabled, and I was being smart. I bought a disability insurance policy, and I bought it from a spreadsheet. Believe it or not, nowhere on that spreadsheet am I yet to find someone say, are you a U.S. citizen, permanent resident, or green card holder? And if the answer is, well, I'm not, the first question I would ask is, insurance agent, if I become too sick or hurt to work, and I can no longer work as an orthopedic surgery resident, and I lose my sponsorship, and I need to return to my country of citizenship, is this policy going to continue to pay me benefits? And that, to me, would be a huge deal, because otherwise I might be paying for something thinking I have benefits, and I might not get paid at all, or I might get paid for a very limited period of time. So it happens to be Guardian in 42 of the states essentially says, well, Eric, if you are a visa holder and your disability starts in the United States, and now you have to return to your country of citizenship because you've lost your sponsorship, we are going to continue to pay you for your entire disability, potentially up to your benefit period, like you alluded to, the age of 65 or the age of 67 or the age of 70. The same thing is true if I was in my country of citizenship, I was visiting my family, I had tickets booked to come back within 31 days of my leaving, something happens to me and I cannot make it back. Well, my policy will continue to pay me because Guardian considers that to be incidental travel. But if I didn't know that, and I ultimately bought a policy that either excluded and paid no benefits in that situation, or limited my benefits to 12 months and then they ended, that almost defeats the purpose of buying insurance in the first place. So you really need to be careful and you need to ask questions and go based on what's important to you, not what's so important to the insurance agent that created that spreadsheet.
Larry, this is bringing up so many great points, and I've been taking notes as we're talking here. I've got a couple quick clarifying questions for you. Can you comment on why it's best to get a policy while you're still a trainee or in residency as opposed to waiting until you have that attending job?
Yeah, I mean, the general rule of thumb, is the one thing that's not guaranteed is your health. And I would submit to you, a lot of orthopedic surgeons went into orthopedic surgery because they were athletes. They were college athletes and they probably got hurt along the way in some way, shape, or form. They needed orthopedic surgery. They were able to get back to full activities with no limitations. And in some cases, they have, pins and screws and anchors as a result of surgery. Well, let's say that is the case. And, you had your right shoulder, reconstructed and you've got some pins and screws and anchors in there. Well, if you apply for insurance and it's after that fact, the insurance company is going to say, well, Eric, we'll give you a policy, but we're not going to cover your right shoulder. So if you have any complications or treatment or you need to get the hardware out, and as a result of that, you can no longer perform your job duties as an orthopedic surgeon, you had that before us, we're not going to pay. So health is going to be very important. Number two is age plays a role in the cost of disability insurance. And the younger you are, the less expensive it is. Now, in the late 20s or early 30s, is that needle going to really move? Not really. You're really buying it because you want to lock into the fact that you have a policy and you can purchase it while you're still healthy, while you're young and the rates are lower. And general rule of thumb is the availability of discounts is greatest when you're a resident or fellow. The new thing that we'll talk about is, well, what happens if I'm already past that point? I'm not dead, I'm not disabled, but I got dealt a bad hand. I've got some medical conditions. Some of it is congenital. I know I'm supposed to buy disability insurance, but it doesn't look like this is going to be feasible for me. What do I do? So we'll talk about something that you might have heard about. One of them is at your hospital. It's called a guaranteed standard issue, or we love those acronyms in insurance, a GSI plan. Are you familiar with that at all?
I'm not.
So what you'll see is GSI just stands for guaranteed standard issue. And if you're a resident or a fellow listening to this, or early career, I'd say, you've graduated and you're within 90 to 180 days after your training, ideally before. And you've got some issues. BMI, too high or too low, both can be problematic. Maybe you just participate in hazardous activities like rock climbing, hang gliding, scuba diving, motorized racing, or you've got a history of cancer. You're on an SSRI for anxiety or depression, or maybe you have ADD, ADHD, and you're on Vyvanse or Adderall. And all of these things can lead to application either being declined or, more likely, an exclusion rider saying, we'll cover you for everything except for certain body parts or certain conditions. So a guaranteed standard issue policy is the same policy that you'd buy in the open market, but there's either no medical questions at all, or there's gatekeeper questions. Like, we don't want someone that was diagnosed with cancer last week, they've been out of work for a week, and now they find out and they want to go ahead and buy this policy. So general rule is you have to have been at work for the last 6 months on a full-time basis, and you're not already receiving disability benefits. And a good example, might be someone that was in the service and they're receiving VA disability benefits, and now they're doing a residency or fellowship. At that point, they would be ineligible. Otherwise, you can buy the same individual policy. The barrier to entry, is there a GSI plan available to you at your institution? And it's only affiliation at that point in time. Once you finish your training, the discounts stay with you. You take your policy with you as if you bought an individual policy, which is really what you did. You just bypassed the medical underwriting piece. And there's really two things. The maximum monthly benefit is typically $15,000 a month. One company goes up to $20,000, and that was a somewhat recent change. and it has to have a limitation for psychiatric-based claims. So even if you are on an SSRI for depression, and that would normally lead to no coverage for psychiatric exclusions, no psychiatric benefits, here you're going to be provided with 24 months of benefits for those types of claims. And that's really it. But here's the key, is if you apply medically and you are declined, offered a modified policy, let's go back to our orthopedic surgeon with the exclusion rider for their shoulder, you put an application into underwriting, and then your agent kind of tells you that the Titanic is going to sink, pull your application. Now you have generally become ineligible for this GSI plan. So for the residents and fellows out here listening, this is what you need to know. Before you even think about applying for disability insurance on a medically underwritten basis or fully underwritten basis, where you're answering medical questions, the insurance company is going to review your prescription history, they're going to review your medical records. You need to ask if there is a guaranteed standard issue plan available to you at your hospital.
Larry,
This
who
is where
are they
the
asking? Are they asking their residency or fellowship coordinator? Are they asking their director? Are they asking HR? Who do they even ask?
typically they're going to try to ask graduate medical education. And a lot of times graduate medical education does not even know that a GSI plan exists. It's not even a state thing. It's a specific institution thing. So when you meet with any disability
Oh.
insurance agent, if you're a resident fellow or a recent graduate, here's what you have to do. Do you have access to a guaranteed standard issue plan or something exclusive like a discount that you can provide to me? If the answer is no, and this is where for some reason the female surgeons are much better than the men. The female surgeons will say, don't take this the wrong way. I have to ask you another question. You mentioned that you don't have access to something like a GSI plan or an exclusive discount to me. Can you tell me, are you aware of one at my institution, even if it's something that you could not offer? Because if you are, I would like you to give me the name, phone number, and email address for that agent. Now, you could take a step back and you could be a little nice and say, I'm not telling you that's the direction I'm going to take, but I've got a lot at stake here. I'm looking to protect my income as an orthopedic surgeon, which is substantial. I want to do it right. I need to take all of my options into consideration, especially a guaranteed standard issue plan, because if I apply medically and I'm declined, modified, postponed, or withdraw a pending application, I may become ineligible.
Larry, it's hard to have a conversation these days that doesn't bring up AI in some way. So from your perspective, do you see there being a role for AI in terms of helping people like orthopedic trainees or young surgeons finding, the right insurance products? Or do you think that human aspect you just really can't replace?
I think it's certainly a start. I think the human aspect cannot be replaced because everybody's situation is different. And as great as AI is, and as much as it can simplify things, whether it's medicine, surgery, financial planning, or insurance, personal financial planning is just that. It's very personal. So believe it or not, I've tested this. And I went on to ChatGPT and I said, I'm a resident physician. I'm looking for disability insurance. Who do you think are the top disability insurance agents for physician disability insurance? And it'll give you a list. Is it going to be an overly comprehensive list? No. But you can ask, you can say, well, what should I look for in a disability insurance policy? A lot of times when someone reaches out to me and it's an email, one of my intake questions is, how did you find out about me? And believe it or not, the number that say ChatGPT or internet research is going up every day. So I'd say it's a starting place, but it's certainly not going to be, your be all end all. I never use spreadsheets because I can't tell you the number of errors that I find, the number of omissions that I see. I mean, I was horrified the other day. I actually got a spreadsheet. It had no company names. It said company A, company B, company C. So I think you hit the nail on the head. Like, you're looking at a schematic that you don't know what those product details are or how they're designed, I don't know what that person was thinking when they sent this to the doctor. I'm like, if I can't figure it out and I'm in the industry and I'd have to try to back into what A, the companies were, B, what the premiums are, C, are there any discounts associated with that? The agents are not supposed to be here to create work for you. They're supposed to be here to educate you and take work away. It all comes down to education. And I would say that's really what it is. I mean, at the end of the day, looking for disability insurance, all in should be no more than 2 hours. I'm going to say an hour on the phone with an agent to go through everything in great detail. Let's say another hour, and this is stretching, to look at what it is that you were sent, either before or after that conversation. And then you know what you like and what you don't like. And it's just a matter of narrowing down what works best for you based on what it is that you want to accomplish. That's really all that it comes down to.
Now, Larry, you referenced earlier that maximum monthly benefits, vary by each plan, but in general, there's kind of soft caps and sometimes even hard caps on what those are. I'm sure you probably encounter orthopedic surgeons who are making and looking to protect more than what those caps can be. So how do you advise your clients on the situations where, either it's not feasible to fund, or to get coverage for all of that income, or is there some sort of theoretical max where you say, hey, anything above this, you're probably not going to get covered?
Yeah, so typically the individual insurance company maximum, and it could be one company or it could be a combination of individual disability insurance companies, that's going to be $30,000 a month. And with no other coverage at all, to get that, you need to show an income of somewhere between 1.1 million and 1,250,000, subject to the insurance company's limits. And they're going to be very similar, but they're going to be in that range. If you happen to have group insurance on top of that, now you can have a total of $35,000 a month between the individual companies and your group insurance. That's really, for the most part, where it ends, short of going to Lloyd's of London. They're really designed for either occupations that are uninsurable or occupations that have a very high income, like a physician, like a surgeon, relative to the traditional insurance companies. So the answer to that is Lloyd's of London will go up to 65% of your income minus the other coverage that you have. It's going to be an own occupation policy. It's typically going to pay benefits for either 5 years or 10 years. If you have the 5-year payout version, you can elect a lump sum where if you're still disabled at the end of the 5 years and you cannot return to orthopedic surgery ever again, it will pay that lump sum. And that will really replicate as if benefits were payable, let's say, until your age of 65 or age of 67 or even the age of 70. But there are solutions, out there. A lot of it just comes down to, are you getting what it is that you need relative to what it is that the insurance company is charging? And if the answer is, I earn a lot, I need a lot, I live this lifestyle, I need to continue this lifestyle if I'm too sick or hurt to work, you'll buy it to some extent. If the answer is, I qualify for it, but my spouse is also a professional, and my spouse does very well financially, and we could make it work with what it is that I have now individually or with my group policy as well, then maybe you don't go down that route. And remember, just because you have the insurance doesn't mean you're married to it for the rest of your life. You can reduce your benefit, you can drop policies, you can remove certain riders. So just because you own it doesn't mean that your disability insurance policy has to be static, because at one point you needed it and now you've moved on and financially you're rapidly approaching financial independence. Does that make sense?
Yeah, that was going to be my next question was, say you got a policy when you're a resident and it's obviously covering way less than when you get your first attending job. When you make that transition, should you get another policy? Should you up your existing policy? Is it going to be some sort of blend of the two? Or, how do you navigate that? Because that's not something I'd ever experienced. And all of a sudden I've got a new paycheck that I got to get covered.
Yeah, in the old days, and there was a progression. At one point, believe it or not, the maximum monthly benefit for a surgeon was $10,000, no matter how much money you made. Then another insurance company came in and said, well, look, you could keep that 10. We'll participate up to 15. So if you have 10, we'll give you another 5. That 15 became 17. The 17 became 20. Now we're sitting at 30,000 individual. Some companies will do 30,000 on their own. So you don't really have a need to combine companies the way that you used to. But if you've got multiple policies that you've kind of been collecting along the way, that might be your only way because you don't have increase options or you've exhausted the increase options on your original policies. Then we have to look at, has your health changed? And if your health has changed and you have an increase option on an existing policy that does not have an exclusion rider or does not have you paying an additional premium based on your change in health, that's the first thing that you actually want to use. So we kind of look at your income, we look at what your options are, both individually and taking into consideration, either employer provided. Some cases you have a buy-up in your employer plan, so we'll take you from, say, 50% of your salary with a max of 10,000 to 60% of your salary with a max of 15,000. So we really look at everything that's available. We discuss the pros and cons, and then you really just decide how to move forward. So I tell people, use me as kind of your educational resource. I don't like to make decisions for people, but I say as a guideline, yes, the valuable information that I can provide is in many cases invaluable. And that really is just experience dictating.
Thank you both for an incredible end to that 2-part series. We hope the audience has learned a lot and enjoyed the conversation. If you have any questions and want to reach out to Larry, please email him at lkeller, that's LKELLER, at physicianfinancialservices.com. Thanks for joining us, and we'll see you on the next episode of the FPA podcast. This podcast is intended for general public use and is for informational purposes only. The Foundation for Physician Advancement podcast is not affiliated with or endorsed by Park Avenue Securities, Guardian, or Physician Financial Services, and opinions stated are their own. Lawrence B. Keller is a registered representative and financial advisors of Park Avenue Securities, LLC, known as PAS, OSJ 777 3rd Avenue, Suite 1703, New York, New York, 10017, at 212-541-8800. Securities products and advisory services are offered through PAS, member FINRA, SIPC. Financial representative, the Guardian Life Insurance Company of America, New York, New York. PAS is a wholly owned subsidiary of Guardian. Physician Financial Services is not an affiliate or subsidiary of PAS or Guardian. AR Insurance License Number 1057229, California Insurance License Number OC 37340. Jerry code expires March 28.